Hello everyone. Let's begin Saturday webinar. So this week, right, it has been a little bit exciting now, okay? Because looking at the overall market, sorry, looking at the overall market, we actually do have the first half of the week, everything is going down, and then towards Friday, things just recover to where it was at the beginning of the week. Okay, so this is S&P 500. If I put it in a weekly candle, right? It's actually slightly higher, okay, slightly higher. If you look at Nasdaq is basically like a doji candle like that. And this is mainly because I think initially the market was kind of a little bit pessimistic about the unemployment number and the situation of the job market in US lah. But after NFP, right, on Friday we have NFP came out, the non-farm payroll, the unemployment number came out, and actually the unemployment number went down to 4.1%. The consensus was 4.2 lah. Okay, previously it was 4.2 also, so is a lot. I mean. I wouldn't say a lot, but it is actually lesser than what it was previously and the overall market consensus. Okay, so that means to say that Federal Reserve is somewhat finding a good balance between keeping the inflation down and also ensuring that the unemployment in US doesn't get out of hand lah, and everything seems like so far so good lah. And on top of which, right, on Thursday we have the ISM service PMI that came out, and it was actually a massive beat lah. Okay, it was quite a good result. So if you are looking at the ISM PMI, it came out to be around, why is my internet so laggy? It came out to be around 54.9%. And you can see that the previous reading was 51.54, and then it went up about 3.4 points, okay? But the business activity and the new order went up significantly. So it seems that overall the service sector in the US is still doing well, which means to say the employment in US is like so far for now is being managed quite okay lah. So I will reiterate again in that there is no reason to be bearish. Okay, of course we have a few short positions here and there, but there's no reason for your portfolio to be like totally full of short position or be like super bearish about the market itself. Okay, there's literally nothing to be bearish about for now. Okay, for now. So with that said, right, let's go into the portfolio a bit. So there was only one trade that I closed this week. I actually closed off the Wingstop. Wingstop, we entered a short not long ago, I believe last week. And I closed it out today, mainly because the market was pretty bullish on the NFP data. And I don't really want a lot of short in my portfolio. Okay, so you can see right now in my open position, I have a total of 5 bearish position. So let's say if I do have Wingstop, then I will have about 6 bearish position. And if let's say market were to continue to be bullish, right, I'm not really taking full advantage of that. Okay, so there's no reason to be overly very bearish right now. So I just exit the trade without any major loss. In fact, this is like I lost $450 here, which is about like not even 0.1%. Okay. No, okay, it's about 0.12% loss on the overall portfolio level. So I just get out of this. Okay. So who knows if next week Wingstop continue to go down, I don't really care also, because this trade is there for hedging purpose. And if the overall market is still very bullish, right, I don't really care if Wingstop continue to go down or not. And this is very different from a normal retailer trading where they enter a trade, right? They just look at that trade alone, then they'll be like, hey, why you exit? Wingstop go down already. But from a higher level, from a portfolio level perspective, right, I don't really care if Wingstop continue to go down or not, because most likely everything else will be making quite a good profit. Okay. So I just want to trim my short position, trim the number of short position. So we have entered quite a few trade this way. We entered Matador. Matador is a oil and gas counter. So we do want to have a little bit of exposure to oil and gas, because it seems like overall the crude oil prices are going up, okay? And also, it seems like USD is overall going to be weakened in the future, and I'm quite bullish on the overall emerging market also with China rebounding with all the stimulus, everything coming in, right? There is a good chance that crude oil prices can rebound significantly, and we do want a piece of that pie also lah. Okay, so I have entered Matador. Where is Matador? I always cannot find my stock. I have to do clean up really. Matador Resource Company. You can see the price level, right? It's actually quite nice. It's actually quite nice. So if it sort of bounce off this level, right, we are actually looking at quite a good rebound, okay, towards $65 or $70 level like that. Okay, this level is quite a good entry level. You are not really chasing the very bullish price also. So I think it's quite a good level to get in also lah. And Beyond Me is a bearish trade. Okay, we talk about Beyond Meat in the past few session already. I don't need to go through. And we have the SPY short position. So much like the Wingstop, right? SPY position is also mainly a hedging position, okay? If things continue to be bullish, then this is definitely going to lose money because this is actually S&P itself, the market itself lah. So if the market is bullish, this is definitely going to lose money lah. But in the rare cases where for some whatever reason market decide to crash very big, like go down like 15% like that, then we at least have one hedging position that could cover a numerous long position we have lah. Okay, so we actually work out the risk reward ratio on this last session already, where if I were to lose on this trade, right, I'll probably lose about $4,000, $5,000. But if I were to win on this trade, it's gonna win about $50,000 like that. So considering that I'm risking about $5,000, $6,000 per trade, right? If the market crash, one win on this one trade alone is going to cover all of the long position that I'm holding lah. And of course, if things like Bumble crash, Beyond Meat crash, then I will still be in the net profit, even if market crash lah. Okay. Then ZS doing quite okay, rebounded quite well on Friday. You can see it kind of like want to break through here a bit, but I think this one have a good chance of closing the gap and then even go higher lah. Okay, so we will see how this trade go. Anyway, this is a cash secure put position lah. So if this stock continue to go up and it aspire above 160, right, then of course I'm gonna get around $7,500 lah. Okay, so my profit is actually limited on this particular trade, but we can definitely get into more trade lah. And then we have SCS Shanaya on Singapore market. So that is what do you call that? It's a penny stock lah. Okay, so it's more like a speculative penny stock. So because it is a speculative penny stock, right? Please don't like asking like what happened. I don't know. It's a speculative play lah. Okay, so we are not really playing this because of any kind of fundamental, but rather more of playing a penny stock, like how we play in Singapore market, a very like momentum, more of like a gamble YOLO play lah. Okay, if you can't handle, then of course you should exit the trade lah. But if your risk is not a lot, you can handle the volatility, then maybe this kind of trade, it has a chance of going a lot higher lah. Okay. Then Intel also rebound quite nicely over yesterday. Intel is here, rebound a bit lah. Okay, but I do hope that it can go up a lot higher from here because we are kind of like at the resistance turn support, that kind of stuff lah. Okay, and of course PayPal went up quite big also, 2.65%. Very close to the previous high there lah. Okay, so I also think it can go up a lot higher. And then we have Astera Lab sort of doing quite okay, also rebounded. So you can see a lot of tech company, right? All the chart very similar. Monday, Tuesday, Wednesday, Thursday go down, and then Friday kind of rebound lah. Okay, so let's hope that next week this rebound can continue lah. Okay, so Crystal Biotech is like kind of like want to rebound, don't want to rebound like that, like stuck there a bit. But I hope that it kind of like flatten out here, and then go up lah. Okay, but anyway, it doesn't matter where Crystal Biotech go because we are waiting for the earnings lah. Okay, if it goes down, then earnings very big, then it can shoot up very high. Okay, but if it continue to recover very high, then earning good, then even better lah. Okay, so we are just gonna hold Crystal Biotech for the earning, and Home Depot most likely gone case ready lah. I've put the price to 0. This is my maximum loss, $4,500, and of course Micron still there, waiting to expire at 18th of October, $11,000 loss. Oops. But I mean, it's all right lah. I've already factored in the loss there already lah. Okay. So Allogene recently like want to recover, don't want to recover like that, but it seems like a very nice uptrend here. But I do hope that it can be a lot more aggressive. It just like shoot up one straight line like that lah. Okay. Allogene is a very volatile stock, and recently the movement is a little bit not so volatile. So I do hope some catalyst can come in and shoot this stock price up. So we have earning coming out in around last day of October. So hopefully the earning can shoot this up. Okay. So overall portfolio, not really a lot. You can see my open position still down 3.58%, 12,000, but this majority of this is coming from Micron alone. Okay, actually the rest of the portfolio is doing somewhat okay. So I'm still up about 77%, mainly because the Wingstop loss didn't really affect much. But as I mentioned, right, we still have one full quarter, and a lot of things can happen within one full quarter. And my target is that I can get about 100% return on my portfolio for the 2024. Okay. I have not gotten more than 100% yet. The best I got was in 2020, COVID-19. I got both the short side at the beginning of the year and then the recovery at the second half of the year. And during that period, my overall performance was like 90%. I didn't hit 100%. But the biggest difference is that back then, right, in 2020, I didn't use options. But here I'm using option now. So even though the market is not as aggressive as it was in 2020, right? Option is really pushing the risk reward ratio of a lot of my trades lah. Okay. So in fact, within this trade journal, right, I didn't include the 32,000 that I got from Pinduoduo lah, because it's something that I just anyhow enter, like didn't really think so much. I didn't announce the trade, and then I happen to get that. I happen to get the profit. It is both luck and it is both me willing to take a risk lah. Okay, so a lot of people can blame luck, but if you are not willing to take the risk, no amount of luck can help you lah. Okay, so now going forward, right, I do want to discuss a few things. I do have quite a few trade line up, but it will be a little bit different. The theme will be different because I'm actually looking at the overall yield curve and the bonds lah. Okay, you can see, right, recently the bond yield kind of recover, and it is recovering quite aggressively. Even the 1-year bond recover quite aggressively, okay? And then the 10-year yield also recover quite aggressively. And then, of course, we have the dollar index rebounding. But I do think that this rebound on the dollar index will be short-lived. The overall rebound on US dollar will be short-lived, okay? It's not gonna go back up to like the 2022 level, okay? Mainly because the yield are coming down, but when the yield come down, right, because right now we are in this situation where the yield curve is inverted, right? And now that Federal Reserve has reduced the rate, what the yield curve is currently trying to do now is to disinvert, okay? Is to become normalized again. So the currently the yield curve is something like this, but now it's trying to become like this again. The front end of the curve will go down, okay? So when the front end of the curve go down, usually the back end of the curve will go up. And when that happen, right, it usually from past history, okay, it usually result in the US dollar going down by a significant amount. And with US dollar going down, right, there's a lot of trading opportunity that we can take. So by taking advantage of this recent US dollar rally, right, we can actually get a good position into some of the trade lah, okay? So now some of the trade that I'm looking at is actually TLT. Okay, so this TLT trade is something that I have recommended in the past. I recommended a long position now. Okay, I have recommended a long position like somewhere around here like that. And so far it has rallied quite significantly. But now, right, because of the rate cut and the yield curve is normalizing, right? When yield curve normalize, the back end of the curve will become higher and higher lah. So meaning to say your 10-year yield, 20-year yield will start to rebound quite significantly. And that will mean that TLT will start to go down. Okay, TLT will start to go down in response to the back end of the curve rebounding. So TLT is a ETF for 20 plus year treasury bond, and highly likely that as the longer maturity of the treasury yield increase, right, TLT will start to go down. Okay, in fact, we are seeing the first breakdown in the trend already, and it's actually a very good entry point that we can take in the upcoming week. Okay, TLT downside, maybe it might go back down to probably like $88 like that. So we can get a good profit out of it. And with US dollar declining, right, there are a few other things that we can play, things like gold. Maybe gold stock will continue to be bullish, or if you want to buy the actual gold itself, up to you. And of course, things like Bitcoin can be very, very bullish during the period of US dollar declining also. And you can see Bitcoin kind of like been consolidating for a while. And I would not be surprised. I'm not betting on it, but I would not be surprised if Bitcoin actually shoot up now. Okay. So now I don't play Bitcoin, and I don't play Bitcoin in a direct manner where I buy the actual Bitcoin, but I wouldn't mind playing certain company that are related to Bitcoin. Okay. So one of the company that I have shortlisted, in fact, I got a very small position. Okay, is actually ClearSpark. Okay, ClearSpark. So for those who came for my course, you'll probably remember this if your memory is still fresh. It's one of the stock that I show during our stock choosing process. And in fact, on Friday, right? Friday, as I was preparing your slide, I realized that hey, actually this stock not bad. So I actually entered a long position, and it went up about 10% on Friday itself. So with overall US dollar declining and with the interest rate coming down, right? I think this can go up a lot higher. So because this is not a very expensive stock, $9.58, highly likely that the option is going to be very, very cheap also. So you can put like maybe $300 risk, $400 risk, and there's a good potential that $300-400 can become like $2,000-3,000 lah. Okay, depending on how you structure your trade. Of course, I will definitely share my structure on Monday lah, but it's something that you can enter very, very small, but your reward can be quite significant. Okay, so it's something that you can consider. I will not encourage a stock position though, but if you do want to go for a stock position because you don't really have option, right, then you can place your stop loss here lah, around 7.85 like that, or maybe a little bit lower, like 7.5 like that. And then you can take this to probably like $16, hopefully around $16 like that. So this is something that you can consider lah. Okay, so now I have also entered Lenovo. I already have Lenovo previously, but I enter more position lah. Okay, because my original position is doing quite okay now, so I think I can add more position to Lenovo and hope that it can continue to rally with the overall Hong Kong market recovering lah. So now there's another side effect of weakening US dollar also, and that is the emerging market lah. Okay, the emerging market can become very bullish as US dollar weaken. And emerging market, I'm talking about things like India, Korea, even Hong Kong, maybe not lah, China, or all this kind of company lah. Okay, so instead of like choosing random stock from all this emerging market stock market, right, what I can recommend is you can actually just buy the emerging market ETF, which is EEM, iShare MSCI Emerging Market Index Fund. So although this is you can see is recovered quite big, But I think it can go a lot higher, probably to like $52 like that. It can maybe break the all-time high like, if US dollar continue to decline. Okay. So now what is within this ETF? I looked through a bit, and in terms of geography, right? In terms of geography, why mostly is China stock. Then you have India stock, you have Taiwan, you have South Korea, Brazil, Saudi Arabia, but the biggest weightage is China, India, Taiwan, South Korea, South Korea lah. Okay. I don't really see any Japan. I will expect some Japan, but it's not here. But anyway, having exposure to South Korea and Taiwan is also good. India is also quite okay lah. I mean, this is emerging market after all. So their biggest holding is TSCM, Tencent, Samsung, Alibaba, Meituan, PDD, Reliance Industry, HDFC Bank, ICIC Bank. So these are all very, very stable, popular name that you know lah. Okay. So now this particular ETF, there's definitely option. You can play option on this, and with option, right? I'm trying to figure out a structure, but it is quite attractive. The option prices is quite attractive, and if it can go to $50, right? I managed to find a structure that can return like 300% to 400%, meaning to say that if you risk $3,000, it can become $9,000, $10,000 like that if it go to like $52. Okay. So I will share this trade structure next week also, but I will try to see whether if it's going to retrace or not lah. Okay, if next Monday retrace, then good for us. We can get in at a cheaper price lah. Because to be honest, right, it has rallied by quite a bit. So we need to account for possible retracement by maybe playing things like a calendar spread or maybe even a cash secured put, that kind of stuff lah. Okay, so we do need to factor that in a bit, and I see what is the best structure that we can take out of our option lah. Then looking at other stocks, I did came across Shake Shack. Shake Shack is still the highest growth in the restaurant sector lah. Okay, and recently it have recovered a lot. And if you are looking at this, if you are a technical chart pattern person, you can say this is your reverse head and shoulder, whatever nonsense lah. Okay, but I do think that it can go up a lot higher. It can break the high lah. Okay, Shake Shack if I recall the last time that I was looking through this stock, they do have a lot of growth initiative coming in. And in fact, for those who managed to join Shake Shack, right, we actually got it right at the bottom at $59. Right there. Currently it's like $110 already. The stock price actually doubled already from like the last trade that we ever got. Okay. And I do think it can go up a lot higher. So once again, this one I will keep it in my back pocket first in my watch list, because maybe it can get resistor come down. I don't know lah. Okay, but the earning is coming up very soon. It's already confirmed on 30th of October, and I do think that the earning it can really gap up all the way lah. So we see how we can enter lah. Okay, the lower we can enter, of course, the better lah. So this is all I have. So in summary, right, we do want to be bullish, and the US dollar declining in the near future is quite a high possibility. So because of that, we will want to take advantage of that as much as possible through some of the stock that I have mentioned. You can buy gold, you can buy Bitcoin, you can enter emerging market, you can short the TLT, all signs, all kinds of stuff lah. Okay, so these are all the trade that you can take, but of course, please don't take all of the trade, because if your entire portfolio is structured around US dollar dropping, right? But if US dollar rally, then your whole portfolio gone lah. So maybe take one or two trades, see which one is best for you, and you try to decide for yourself lah. Okay, so that's all I have for everyone. And of course, October earning season coming in. I'm not sure if the upcoming week is the bank's earning. Most likely it is, but we shall see how the earnings go lah. Okay, so definitely a lot of volatility will be coming back in the market again lah. So make sure you are on your toes. Make sure you keep a close lookout on your portfolio, your trades. Please don't sit around, wait for instruction, wait for my post, and then you take action. take care of your own money, okay? I'm here to share trade, share my view. I'm not here to manage your portfolio. So don't wait for my instruction to do things. Hit stop loss ready, please cut. Don't wait for me to say, okay, guys, cut now. Don't do that kind of stuff, okay? So have a good weekend, guys, and have a good night. Thank you very much.